All right, it is Saturday, June 13th, and this is the weekly market weather report. Here I've got the chart, the daily chart of SPY. I have the 3 EMA as a dotted yellow line, the 13 EMA as a yellow line, the 55 EMA as a light blue line, and the 233 EMA as a dark blue line. We also have our trend stack indicator telling us if these EMAs that I mentioned are in the correct order. It gives a score from 0 to 10. And we have our short-term momentum indicator, which is an RSI-based indicator looking at the difference between the 13 and the 55, and the long-term momentum looking at the difference between the 55 and the 233. So let's take a look at the charts here. So here we've got SPY. We did pull back almost to the 55 EMA, and Thursday and Friday started to bounce from there. The short-term momentum indicator is still red. It has not shifted back to light red. But the long-term momentum indicator is still bright green. Trend stack is 8 out of 10. We're just waiting on the 3 to come up above the 13 here to get back to 9s and 10s. The equal weighted S&P 500 RSP, noticeably stronger. It just pulled back a little bit below the 13 EMA, as opposed to the SPY, which pulled all the way back to the 55. The short-term momentum is still bright green. We've got 10 out of 10 on the trend stack. Bright green on the long-term momentum as well. So market breadth seems to be good. While we're talking about the breadth of the S&P 500, let's look at a couple of our breadth indicators. The S5FI, it's the percent of S&P 500 stocks above their 50-day moving average, and this looks really good. We've got the trend stack 10 out of 10, and we've got bright green on the short-term momentum and bright green on the long-term momentum. So market breadth appears to be very healthy. And let's also look at the percent of stocks above the 200-day, and it's a similar story. So market breadth in the S&P 500 does look good. We have a lot of stocks participating. Back to our indexes, the NASDAQ Composite Index, very similar looking to the SPY. It has not reclaimed the 13 EMA yet, and we do still see short-term momentum red. Long-term momentum is flipped to bright green on Friday. NASDAQ 100 QQQ, right at the 13 EMA. Trend stack is up to 9 out of 10. That's good to see, but the short-term momentum is still red there. QQQ equal weight, better version of this. We've got 10 out of 10 on the trend stack. We've got bright green on the momentum. We're clearly above the 13, so that looks very healthy. And here's the main weakness in the market right now, the Mag 7. Mags still trading below the 55 EMA. Looks like the 13 even wants to cross below. So weakness here in the mega caps here. Dow Jones Industrial Average. Clearly above the 13 EMA, 10 out of 10 on the trend, bright green on the momentum. So it looks very healthy. Mid caps, MDY. Very healthy looking, breaking out all-time highs above the 13, 10 out of 10 on the trend, bright green momentum. And the small caps IWM also breaking out. We got 10 out of 10 on the trend, and the momentum is light red, hasn't shifted to bright green yet. We'll be looking for that to happen in the coming days. And looking at the IBD 50, these are the growth stocks. We do have 10 out of 10 on the trend and light red on the momentum. And finally, the volatility index, the VIX, did spike up, and the momentum did turn to bright green on that was last Friday, and sort of stayed green all week, and then on Friday of this week, on the 12th, at least it's started to cool down a little bit, get back below these moving averages, and turning to dark green. So we'd like to see further cooling off of this VIX. It did get up over 20 at times throughout the week, but now we're at a 17 handle on the VIX. Next, and so also here I've got all of these indexes up here. Notice I did color code each one according to their short-term momentum. So we're seeing strength in the equal-weighted S&P, the equal-weighted NASDAQ 100, the Dow, and the mid-caps. Those are the ones showing the most strength right now. We're waiting on SPY and QQQ to shift. And while we're looking at that, I wanted to take even so going back to the SPY, momentum is still dark red. If we go to shorter time frame, I like to use the 78-minute charts. That's 5 bars per day. And going to the 78-minute chart, we can see that that we're getting some improvement here with the momentum starting turn green on this very short-term momentum indicator. And we also have the trend starting to come back in. And also let's look at the 78-minute on the Qs. Very similar. So taking kind of a finer look, we can see we do think the SPYs and the Qs are trying to turn, even though their momentum indicators are red at the moment. And now let's turn to the 11 spider sector ETFs. I have these color coded. We'll start with the light red ones. XLU, the utilities. Trend stack not quite there. We're bouncing off the 233, but we do have light red momentum with still red long-term momentum, so possibly trying to bottom there. The industrials, XLI. We do have the trend 10 out of 10. This one has been trading pretty flat, so we have momentum has been hanging around the 0 level, sort of shifting green to red, so we have a lot of shift around the 0 level here. Materials, XLB. We do have the 10 out of 10 on the trend, and momentum at light red, trying to break out of this base level here. And now the green ones, real estate, XLRE, just turned green on Friday. Looks like it's trying to break out. Got 10 out of 10 on the trend, so real estate sector looking good. Consumer staples, XLP, 10 out of 10 on the trend, turned green on Thursday. Trading right at these recent highs here from May. And healthcare, XLV, has been green for a while, and we'd have 10 out of 10 on the trend stack. So XLV looking healthy. And XLF, the financial sector, 10 out of 10 on the trend, bright green on the momentum, looking very healthy, like it wants to sustain a move above this 233. And now the red sectors, XLK, looking very similar to QQQ. So it did turn red this week, and but we do have the trend starting to come back into alignment. We'll be looking for this to turn back to green next week. Energy sector, XLE. We have 7 out of 10. 7 out of 10 on the trend stack. Dark red, short-term momentum, fading long-term momentum as well. And the discretionary sector, XLY, 5 out of 10 on the trend and dark red momentum. And finally, the communication sector, struggling to maintain the struggling to get above this 233 EMA. Terrible trend stack and dark red momentum. So looking at our sectors, it's good to see that we have more green. For a while there, we were only seeing green on the technology sector. Now technology has at least briefly turned red, and we have these other sectors that are turning green and light red. So looking good to see wider participation in the market. And now let's take a look at some other assets. First, we'll look at DXY, the dollar index. Trying to maintain a move above the 233 EMA. We've got bright green momentum, 8 out of 10 on the trend stack. Bright green long-term momentum. We'd kind of like to see this kind of stay flat or go down a little bit. The 10-year Treasury yield, TNX, also cooling off below the 13 EMA. Momentum turning red. Trend stack 7 out of 10. We'd like to see this continue to fade. USO, the oil index, 5 out of 10 on the trend, dark red momentum, break below the 55 EMA. So oil prices seem to be going down. Gold, looking terrible, below the 233 EMA, 3 out of 10 on the trend, dark red momentum. Silver, very similar, though it is reclaiming the 233. And we'll end here with Bitcoin. This red line down here is the February lows. Looks like it has bounced off those February lows. Short-term momentum at least has turned to light red. So that's Bitcoin. All right, so that's it for the weekly market weather report, and I'll be back next week.